What's going on? Appreciate you guys taking your time out this day to listen to myself, Garati, your local realtor, and my good pal right there, Mr. Mortgage Dad, Ronnie Fairley. Say what's up to everybody,
How's it going?
Ronnie. What's going on? So, as always, we
Doing
just
good.
like to kind of share some information and facts that's relevant to when it comes to the market that we're in, real estate. And, we're professionals here locally, and we just like to talk about real estate. And we actually found an interesting article that we felt was relevant, especially for those in the market to buy, whether it's today or tomorrow. Certain things that you always pay attention to is the cost borrowing money. Unless you come from money, then you don't worry about these type of things. But if you're actually going to leverage financing, then you're going to have to be familiar with what they call the closing costs associated with actually getting a loan. In this case, we actually have an article where the Consumer Financial Protection Bureau has actually decided to launch a public inquiry where they want the public, along with mortgage lenders, to kind of give insight on what they call junk fees. Junk fees are basically fees associated with the closing costs for you to borrow the money from the bank to actually purchase your home. Certain fees are fixed, certain fees are negotiable. This is kind of good because I know there's been times where I look at a HUD statement or closing statement and I see one lender that I've worked with where they've actually have a certain cost. For a prime example, to pull your credit. They charge you for that. One company would charge a certain amount, while another company that I've worked with, I look at how much they charge. Like, why is it different? Like, it's pulling your credit is pretty standard across the board. I guess depending on what company they're working with. So I know on your end, Ronnie, you kind of have you understand basically what is set in price as far as close costs and what's negotiable.
Yep. Yeah. So I think the two part of say closing costs that are so there's three part of closing costs real quick. So one is the bank fees, which we kind of talked about, whether it's your underwriting and processing fee or your application fee, credit report fee, whatever that may be. And then you also have then the title costs. So every state
Mm-hmm.
may be a little bit different, but the state's going to get their money, so it'll be transfer tax stamp, all this other types of fees that the state dictates, how much it is. And then the third part, which is really your escrows, which is kind of like your own savings account, whether it's homeowners insurance and taxes. So those three basic things, make up a closing costs. But this is talking about are I think the bank fees and the title fees, right? What are some junk fees and what
Yeah.
are some things to look out for? And
Yeah.
yeah, so that's kind of where you just educate yourself. So I think typically speaking on the bank side, there's going to be a credit report fee, and recently credit report fees have gone up. I know we were talking,
Yeah.
off camera, just this year, and there's new laws and regulations going on, right? So kind of to help the consumer, help everybody, and the credit bureaus used to be able to sell some data like, hey, this person just got their credit pulled. I can sell it to maybe a different industry so they can maybe go after that person to try to solicit to business. And there's being a little bit stricter laws on that now. So
Yeah.
this is my opinion, and I think it just makes sense is since these credit bureaus are going to lose a stream of revenue because now they won't be able to sell a certain amount of that data, they're charging the person that's pulling that credit a little bit higher. So um,
Yeah.
not
Yeah, I've seen
astronomically,
credit fees.
but
Yeah, but I've seen it vary from 75 dollars one lender versus 125 another lender. And I look at this, I said, okay. But to your point, the reason why they've increased the cost of their pulling your credit to actually get the mortgage or the loan to actually purchase a home. So
correct. It's almost like doubling. So even if it was $60, maybe it's now 120, whatever that is. So it's still a cost. It's uh, but that's going to be kind of across the board. So like every bank is going to have that issue. It's not like one bank's going to get a cheaper credit report than the other, but that's why for someone that's kind of been in the business or maybe got a mortgage a couple of years ago, they may notice, hey, the credit report fees kind of gone up. But as far as junk fees, you kind of see it across the board. The normal fees, it's easier to talk about the normal fees because a lot of people just be kind of savvy and will label it all these different things. But kind of like I mentioned before for the bank, you're going to have your, underwriting or processing fee, appraisal
yeah,
fee, credit
process.
report
Yep.
fee. Those
Yep.
are kind of the three main fees that you're going to get from a bank. And then points will be kind of in there, but points is kind of a different, you know, some will have points, some won't. Basically, it's tied to your interest rate, which a lot of people don't realize, which a lot of people are doing nowadays is trying to sell you on the interest rate. Look, our interest rate
Mm,
is 6.5 or whatever number that is, which is maybe a little bit lower than what you're seeing out there. But what you might not know is you're paying what they call points, which is basically a fee
yeah.
to get that better interest rate, which some people don't realize at all. And some people don't realize it till halfway down the road. And it's like, wow, I'm paying 3,000, 4,000, whatever dollars extra to get this
Hmm.
interest rate. So it's just about,
Now, are there any fees that are negotiable when you're working with a lender?
um, not a lot. So typically the way I work is that, we don't, and I'd say a lot of lenders don't have junk fees, but there are lenders out there, right? So I don't want to stereotype,
Yeah.
but our fees are pretty standard, right? I kind of across. Now, I will say, could you ask for $100, $150 credit, right? So to maybe help offset some of it, yeah, you can ask for that. Usually, you're more opt to get maybe a credit, towards your closing costs versus lowering a fee. Hey, can that 1,500 be 1,300 or 1,200? It's your easiest thing is to maybe ask for, hey, can I get $100 lender credit or something? Can you help, keep it open and see what maybe that particular loan officer can do and kind of help ease a little bit of that cost.
Yeah, and one thing I will say compared to, was it prior to the financial crisis or the credit crisis in 2008? I think was it a Dodd Frank Act when that came out. It allowed more transparency and clarity as far as consumers knowing what's actually associated when borrowing money from the bank as far as fees. My
Yeah.
understanding, because I really didn't get into the market until after that. Prior to I think 2008, you you really didn't know what you was paying for. It wasn't like an itemized breakdown list to really fully understand, hey, what am I paying for to actually borrow this money to buy this house? Now, fast forward, there's a lot more transparency and clarity. So I guess with this, initiative by the Consumer Financial Protection Bureau, they just want a little more transparency, more clarity, just to make sure that everyone's on the same page from the consumer to the lender. Now, one thing I will say, I learned this years ago when shopping around for a to work with a lender. One great way to see, hey, if this lender costs more to work with versus another lender is comparing how close is your interest rate to the APR, I believe it's called, right?
Yep.
Or is APY?
APR.
APR. Prime example: if they've quoted you a rate of 6.0, and their APR is 6.2, versus going to another bank who's quoting you same rate, but their APR is 7. Basically a whole percentage more, 7.0. That difference, the closer your APR is to your interest rate, lets you know you're paying less in fees to actually borrow that money. If I'm saying that correctly, Ronnie.
Yeah, yeah. So the APR will bring into like a lot of the closing costs a guide to it. So usually with, like I mentioned before, that some banks will say, hey, we got an interest rate of X, right, which seems really good, but you may see that APR is a lot higher than that interest rate
Mhm.
is because there's a fee to have that rate, right? You can always buy down the interest rate, which is why it's so important to have that loan officer that really trust and like, because you can say, okay, today's rate is X. We can buy it down to this, or we don't. We kind of run the mathematically. Hey, if it's going to cost you $3,000 to buy it down to this lower rate, hey, you're saving $50 a month. I'm just making up a number, whatever that number is, and you can kind of do a math. How
Yeah.
long is it going to take you to recoup that $3,000 you cost to buy it down? Where are interest rates going in the future? Right now we're in an environment where interest rates, they're speculating in the next 2 years are going to come down. So you have that conversation. If you plan on being in this house for a while, maybe take whatever interest rate is today for the lowest cost.
Yeah.
So there's no out of pocket cost to the rate, and just know in the next year you may refinance into a lot lower rate than what you could buy it down today. So it's just having that conversation and see what's right for the best, best situation for
Yep.
the client.
And that's the beauty behind it, being able to have that conversation, being able to know exactly what the lender is charging, taking that information and comparing that with other lenders, basically shopping around. We live in a society where you can shop around and find what's the best ideal rate and lender to work with. And we all know Ronnie prides himself in transparency and education, and that's the biggest thing. It's just for us to, be educated correctly and knowing what to do with the information to make the best decision for
And
when
the
in this
one thing I'll
case
just add to
borrowing
that real
money
quick,
from the bank.
one thing I'll add to that real quick about shopping around, I'd almost say more interviewing the mortgage person you're talking to, because shopping around, like everything
Okay,
nowadays, could be a lot of smoke and mirrors, right? Hey, we this rate, that
well
rate, blah
said.
blah, whatever it is.
Great point.
And the unfortunate thing about this industry is if you're not if you're not talking to that person, have that relationship with, and all of a sudden
Yeah.
you got a contract, you're going down the path, and you realize, they misled you a certain way. It's too late. You can't really just jump ship and go to another lender, because in real estate, you can't just rewind. You got a time frame, and that's where some of these lenders
Mm.
will kind of pry on, like selling you this, but you just got to be careful when you're out there. So definitely talk to the persons, check their knowledge, and make sure they're out there for you, the best interest of you.
I love that because nowadays we're so easily think we can just go online and read what make sense of what we're reading versus actually talking to someone. So a great point, man. Actually talk
Yeah.
to someone. Don't, if you're going to shop around with, like Ronnie said, not online, but actually talking to someone and asking your questions and making sure that you understand what they're telling you. And we got Ronnie information scrolling on the bottom. If you guys want to reach out to us, you guys know how to. Facebook, social media. So, with that being said, as always, we appreciate you guys' time. We're here to inform and not to entertain, and stay informed and not influence. Appreciate you guys' time.